Uber is in the spotlight as traders gear up for the company's next moves following its robust Q2 2025 results and rumors of a potential $20 billion stock buyback program. The chatter comes amid heightened competition from Tesla's emerging robotaxi ambitions, which some see as a looming disruptor in the ride hailing space. The company posted earnings per share of 63 cents, beating the Zacks Consensus Estimate by a penny and marking a 34% year over year increase. Total revenues came in at $12.65 billion, topping expectations and rising 18% year over year on both a reported and constant currency basis. The post pandemic normalization of economic activity has been a key driver, as more people are traveling to work, events, and leisure destinations. This resurgence has propelled Uber's mobility segment, where revenues surged 18% and gross bookings reached $23.7 billion, also up 18% year over year. The delivery segment also proved to be a powerhouse, with revenues climbing 23% and gross bookings rising 20% to $21.7 billion. Interestingly, in several international markets, Uber Eats has now outpaced ride hailing in popularity. The company is actively pushing cross platform engagement, aiming to turn ride hailing customers into delivery customers and vice versa to maximize lifetime value. User engagement metrics were equally impressive. Monthly active platform consumers jumped 15% to 180 million, while total trips hit 3.3 billion, an 18% year over year increase. Free cash flow surged to $2.48 billion, underscoring Uber's growing financial strength. Community sentiment is sharply divided. Bulls point to Uber's diversified growth, expanding user base, and strong cash position as proof that the company is entering a new era of profitability, especially if a record setting buyback is confirmed. Bears, however, remain wary, citing valuation concerns, competitive risks from autonomous driving innovations, and the potential for market manipulation around the buyback narrative. Analysts are also split, with some projecting sustained upside momentum, while others warn of volatility based on Uber's historically mixed post earnings performance. For now, all eyes remain on how Uber navigates the dual challenge of capitalizing on its current momentum while preparing for the technological disruption that Tesla and others may soon bring to the mobility sector.
Okay, the underlying trend on the stock is a bullish one. Its 200-day moving average is sloping bullishly upwards, and the extrapolation is saying that high prices will continue to print at least up till Monday, the 18th of August, and then after that, we might get a contraction. Then thereafter, the uptrend may resume. We have, in terms of projections, let's see what we have. We currently, as things stand right now, we have nothing to the upside. For now, nothing to the upside. Just downward projections 80.16, 82.13, 85.30. But previously, there were upper projections. We had 87.89. No, not an not an upward projection. 89.33, not one as well. 91.65 is surely one, and then 92.86. Let's see whether we had. There's 95.18. There's 99.58, but these are not fresh projections. So as things stand right now, technically, um, a lot of I would say a lot of if you like, a lot of funds wouldn't be buying Uber stock at the moment as things stand right now, even though it has pulled back and has pivoted, but it still is. It hasn't cleared the woods yet. It's still in the woods technically, still in the woods, but it's improving. We have negative price pressure momentum values, indicating that the selling pressure hasn't gone away completely. Still there. Buying pressure has wiped away the weakness that arose from this decline, but It doesn't mean that if you buy or trade now that you're not going to make money or anything. But I'm just pointing out that just to just give you a different perspective of how things are. They will start buying when this value gets to 0.25, especially this price pressure momentum 2. This price pressure momentum 2 measures the angle of attack of the moving averages. So in this case, it will be the 21 day moving average. So you can just imagine if there's an immense amount of buying pressure, the stock, spikes. There's a pop, or for instance, you can imagine that the stock would just go vertical. These moving averages, especially, this moving average, especially maybe the 10-day moving average, if it's just something that has just occurred, it was to go steep, something like this, you can see that that's quite steep. Um, so depending on where it is, if it's already severely bearish, which would change, but if it's already out of the woods, then it might. If it's a sustained push, a sustained rally, the value will the value will rise. It will go beyond. It will go to go to 0.25 and then begins to steepen. So 0.25 is trend mode. So the point I'm trying to make is now, or the point I'm trying to make is that even though the stock has pivoted and is recovering, it hasn't. It's not in the trend mode yet. So by some by some standards, it's not yet a buy. This does not mean that you shouldn't buy it. I mean, who can tell you that you shouldn't buy? Who can tell you that you shouldn't buy it when it has printed a double bottom? It has pivoted and discounted from the highs of $97 or thereabouts. I mean, who's there to tell you not to buy? So what I mean. So I'm only trying to say that by some standards, it's not a buy yet. It's just more of a case of watch and see. If it gets to 0.25, especially on its price pressure momentum one, then maybe a buy. So in the coming days, an opportunity may ensue. But have a look here and let me see. Let me show you here. See what's going on at this sort of level. It dipped always all the way down here. It wasn't a buy, but it's improving. Just watch this. Just watch these values. You can see here. It wasn't a buy. It wasn't a buy yet, but as it continued to increase, it wasn't even improving anything. It wasn't improving. It wasn't improving. But here you can see suddenly it went from, okay, down here. It was a negative 0.0442, just gradually improving. But unfortunately, this is a daily chart, so you can use the 4-hour chart and then you will be able to see this. But if you want to know where you can get this indicators, just drop a comment and uh, drop a comment below. Then I'll give you a link where you can get this indicators. So we can see now suddenly has gone to 0.53, way beyond trend mode, and then you can see the stock continue to blast up. You can see that. You can see that it's from here it was confirmed that yes, this buying is, yeah, confirm that this buying, it's time to buy. You understand what I mean? But at the same time, who said you can't buy from here? You know. So as things stand right now, the point is that if you think it's a buy, why not? But at the same time, it could also mean that you may have to probably wait a bit longer. You know, some a couple of days. But yet at the same time, who said you shouldn't buy now? And who said you shouldn't buy anytime you want to buy? So yes, high prices expected to keep printing, but we don't have anything really ambitious, so we can come down and have a look at the weekly chart. On the weekly chart, we have 92.1, 97.47 currently in play. Let's see. Before now we had this was as of April the 28th. We had 91.49, 103.78, 111.36. Yeah. So those are some of the prices. We could see if there are any on the monthly chart. Let's see, currently in play on the monthly chart. Yeah, we even way more ambitious projections. We have 117.09, 140.86, 155.55. Yeah. So jump in there and see if you are interested in Uber stock. And let's see, we have the 4 hour chart. Here we'll just have a look at the price pressure momentums and see what it's saying. Okay, so you can see it's totally different. So yeah, this is totally different. So the best, so you can see here it is clearly a buy. It's clearly the opportunity has actually gone away. The best opportunity has actually gone away. That would have been somewhere here. Let me see. That would have been somewhere here. Let's see. Uh, yeah, let's see. That would have been somewhere around here. So of Monday, the 4th of August, that was when the window opened. Even though it's corrected, it was still maintaining. Okay, well, it actually corrected and provided a better another opportunity, but it wasn't as good as when it was around here. So of Monday's pre-market session, and this was Wednesday's pre-market session as well. So yeah, your best bet is actually the 4 hour chart because you can clearly see it's active, and it's active during the post-market session. So if you don't have access to trading during the pre-market sessions, at least when you see that the window is open, you jump in when the market opens and all that. So yes, clearly here it gives you a better picture. The opportunity has actually opened, whereas it's on the daily chart it hasn't really opened. So but at the same time as well, the 4 hour chart is also like it's like a trading window as well. It's more of a trading window, whereas the daily chart is more of an investing window. But you can who says you can't use this to open your investment positions. So here it's saying that strength is expected to remain in place up till Monday, the 11th of August, and then thereafter it will decline to decline by Wednesday the 11th, and by Wednesday the 11th, and then after that high prices will ensue. So here do we have projections? We have 92.94, 96.16, 98.15. So one more time, have a look and see what you make of Uber stock. And thank you very much for watching this video.